Fresh US GDP data revealed that the United States economy has been shrinking for the second quarter in a row. So Janet Yellen and Jerome Powell were right. According to the current working definition, a recession happens after 3 negative quarters of economic growth in a row, not 2 as previously thought. However, the report clearly indicates that the US economy is steadily sliding into recession. At the same time, policymakers still insist that a recession is unlikely to take place. Investors are extremely concerned about their stance. Besides, an economic downturn is accompanied by a soaring inflation. For almost half a century, the United States has not faced such challenges. Judging by the comments of Janet Yellen and Jerome Powell, they do not know what to do in such a situation. Some analysts reckon that the United States is lacking experience in handling such problems. For several decades, there have been no such risks. This is why policymakers are now puzzled. It's also hardly surprising that the United States dollar is losing momentum. Meanwhile, Europe is facing similar problems. The economy is clearly slowing down, so it may enter recession as well. The Eurozone is also struggling with a galloping inflation. Nevertheless, the Euro area GDP data turned out to be better. The pace of economic expansion slowed to 4% from 5.4% versus the forecast reading of 2.8%. In quarterly terms, the GDP figure was positive. In the second quarter, the economy grew by 0.7%, although analysts had predicted a 0.2% rise. At the same time, the energy crisis and the military conflict in Ukraine are weighing on the economy. Besides, analysts may worsen economic forecast for the winter due to a drop in Russian gas supplies. These risks could also boost inflationary pressure. The ECB will have to tighten monetary policy more aggressively. According to preliminary estimates, inflation accelerated to 8.9% from 8.6% in July. The figure was also slightly better than the forecast reading of 9%. Yet consumer prices are still rising, exceeding by several times the target level of ECB. The economy is losing steam as well. Compared to the United States, there are no clear signs of a recession. However, given the energy crunch in Europe, there is a risk of a sudden deterioration of all economic indicators. The euro-dollar pair is expected to decline to 1.01. If so, the pound sterling is likely to fall to 1.21. Currently, the euro-USD pair is moving again in the previously broken narrow range of 1.0150 and 1.0270, signaling market uncertainty. For this reason, it's better to wait for a rebound from the borders of the narrow range of a breakout of one of the pivot levels. If the pair rises above 1.03, an upward movement will prevail. If it drops below 1.01, the quotes will resume a downward movement. Bear in mind that only after a consolidation of the price above or below the pivot levels on the 4-hour chart, we will see a clear trend signal. The GBP-USD pair retreated from a 1.2155 yesterday as it was extremely overbought. The downward movement was short-lived. By the close of the daily candlestick, the quotes again returned to 1.2155. These price fluctuations indicate that the bullish bias remains strong. A signal about the prolongation of the current correction will occur if the price holds above 1.22 on the 4-hour chart. If so, the price is likely to touch the swing high of the current recent correction, running in the range of 1.23 and 1.24. Alternatively, the price may decline below 1.2100 on the 4-hour chart. How will going to be in the short term? We will definitely tell you in our next news releases. Don't miss them and stay up to date with us. See you soon.